Well, hello and welcome to another video from Real Tail Trader. My name's Simon Gray, and the name of this channel is Real Tail Trader. I am a retail trader. I trade from home, and this is pretty much my full-time vacation now. Based on what I've learnt over, goodness me, the last 7 or 8 years, I am aiming to tell the real story of what the currency markets are all about, and what the foreign exchange markets are all about. Not a lot of the nonsense that you see out there. I was reading in some of the forums yesterday, which I like to do online occasionally. Forex Factory is one that I use, and some of the comments and some of the posts that people put in there just gives me a real clue that a lot of people don't know what they're doing. A lot of people are looking for external confirmation that certain things are going to happen, when they should get in, when they should get out, whereas in reality, to have a winning strategy, a winning edge in the market, it all comes from within. It's what you decide, what you choose to do, and how you do it. And once you understand that, then you have a win. You potentially have the ability to have a winning system, because what you can't control is the markets. The markets will do what the markets will do. The only thing you can control is what goes on inside your head, and what you choose to do, how you enter, how you exit, how you manage your trade, how you control your emotions, fear and greed. And this is why, if you pick up any decent trading book, what they'll tell you is that psychology is the most important thing. And having been in the market for 7 or 8 years, I can tell you it definitely is. So with that said, I'm going to run through some of the things I'm doing, some of the things I'm seeing. Quick disclaimer, as always beforehand, this is not a signaling service. I'm not suggesting you buy or sell or do what I'm doing. This is really for information purposes only. The idea behind this is it keeps me accountable for what I'm doing, because I'm publishing this for all to see. And if you're new to the markets, it gives you maybe a clue as to how somebody who does this professionally now trades. And if you're a bit more experienced, it may give you a different perspective on how somebody looks at the market. So with that said, let me run through a few things that are happening. And before I do that, I should say that I had a rather frustrating problem over the last couple of days. Your imagination's probably running wild there. It was to do with my charts. Basically, I use a platform here called Trade Navigator. And on Tuesday evening UK time, they lost their data feed. So basically, I had no data. And that was down for about 36 hours. When the data did come back yesterday, there were gaps on the chart. This made it very difficult to trade. It made it very difficult to see my signals. What I had to do was to revert to my broker platform. This is a professional platform. I pay about £110 per month for this, and I recommend you have a professional platform. The reason being, you can cross-reference this to your broker platform. It's far more sophisticated. I have proprietary signals programmed in, which help me with my trade selection. But anyway, gaps on the charts, so I had to resort to my broker platform. What I did was manage positions as opposed to enter new positions, so it set me back a little bit in terms of my target for this month. And there's one particular trade that I'll talk about, my CAD JPY short, and I'll explain what I've done on there based on a problem with the signaling. But all's back to normal now. It's one of the reasons why I didn't publish a video the last couple of days. Couldn't really give a fair comment on what was going on because I didn't really know myself. So anyway, with that said, let's have a quick look. Pound dollar cable. I'm not doing much on this. This is in a downward trajectory. In fact, when I look at my weekly market analysis, all of these are in sell signals, so we're very much in sell mode there, I believe. Euro, got this trend channel coming down. I was tempted, and this is the psychology thing. Last night I got a full house signal here. I was slightly late looking at my chart. I was tempted to get in here. As you can see, I made a note. This is the psychology piece. This was greed. I want to get in. I don't want to miss out. I didn't take this trade. Miss this entry. Don't take it late and chase the market. That's a note to myself to remind me. Psychology is the most important thing. And if I had taken that trade, well, I'd be at a break-even point now. So the right decision, not a trade for me. I can remove that. Ooh, I can remove that now. That was, if I can do it, that was my risk reward assessment. Japanese yen. Okay, so the yen has been pretty strong. If you look at this on the 240 chart. We've come all the way down here, had a strong rejection of that 110.00 even handle. That was on the 6 o'clock candle. Getting a bit of buying now, a few bids coming into the market. I am pretty much short the yen. I'll talk about those trades when I get to them, but yeah, just getting a retracement now. We closed above the 50 simple moving average, but then we closed on the candle with a strong rejection candle. That was a committed candle. It shows there are sellers up here. We closed below, so this could be some more buying interest coming back. A little bit uncertain as to where we go with this, but as long as you protect yourself, you're okay. Okay, Swissy, not really seeing too much on this. We look to be in an upward trend channel on the daily, but yeah, not really getting any signals here. Aussie, yeah, bad news for the Aussie. I think this trade issue between China and the US is preying heavy on it. Also, they've had some bad data come out, so the fundamentals kind of back up the technicals. That's always good when that happens. I'm a technical trader, so I tend to ignore the news. What I do is protect myself ahead of the news, but I don't react to the news. And the news is one of the ways that you can get trapped as a retail trader. The news is one of the best ways that the powers that be, the big banks, can manipulate the currency markets, and if you're on the wrong side of it, you can get whipsawed, stopped out, and then the trade carries on in the direction that you were in, but you're not in it anymore. So I don't trade the news. Okay, so a couple of things to say. I've added in a few more currency pairs to my portfolio now. The reason I've done this is I have been looking at these pairs behind the scenes. I've not actively traded them, but by bringing these pairs, 23 pairs now instead of 15, what it gives me is a better overall assessment of the market, because I'm including not just 5 major pairs, but the 7 major pairs. So it gives me a better understanding of relative strength. So that's one of the reasons I brought this in. US dollar CAD. So this looks to be trending upwards. The dollar, when I look at my daily relative strength from yesterday, it was all dollar. It was all dollar bids. So the dollar is in a position of strength, and that could be. I don't like to speculate on this, but I will. It could be because of this trade war thing. So the dollar, the US dollar, the Swiss franc, and the Japanese yen are what's deemed safe haven currencies when there's turmoil in the world, when it's risk off, when people are not wanting to take risks. These tend to receive bids, and it's probably one of the reasons that the Swiss franc, Japanese yen, and US dollar have all shown pretty decent strength. US dollar CAD, yeah, done that, sorry. New Zealand dollar, okay, not doing anything on here. But look at this. Wow, this has been in a real downward trend right from up here. You know, my signal, if I'd have been in this particular pair at the time, my signal here, trend signal, once we got below the 200, that would have been a sell for me. And then I would have followed this down. I would have got out here actually, because we crossed back above the 50, but then got in again here. So yeah, there would have been some points in there, some pips in there for me, but you know, hindsight's a wonderful thing. Okay, let's move now on to some of the positions that I am trading. You'll see I've split my pairs now. I'm trading 23 pairs into majors, synthetics, and commodity synthetics. Basically, commodity synthetics are anything that trades against the CAD, Canadian dollar, Australian dollar, and New Zealand dollar. Canadian dollar fairly closely linked to oil, and the US dollar, Australian dollar, New Zealand dollar linked to commodities, so oil again, raw materials, that kind of thing, because they tend to export them. So, okay, let me have a quick look at this euro trade. So this was a trade I was stopped out of. I was short here on the top of the range. I played this, I played this down this way, and sorry, I played it down, played it up, and then I sold here on a sell limit. Was stopped out. It happens. I'm not getting short again now, but we're kind of at my stop point. If we get a strong reversal candle up here, my rules tell me that I have an opportunity to get short again. We have not really, if I go back to here, we've not broken, yes we have broken the top of the range. That candle closed, that daily candle closed above this high. So for me now we are classifying this pair as in bullish, a bullish trend. Yeah, my range trade strategy would be invalidated even if a signal showed up. Okay, so you're going to take a loss. This is a game of probability. That was a loss, but my loss, as always, was capped by my stop loss. Okay, pound yen, boom, all the way down. I've been selling this for some time now. So I've got two positions on here. Second position in here, that's now in profit. Got a little bit of consolidation here, but we had a YX signal overnight. It's one of my proprietary signals. So, you know, on the balance of probabilities, there's every chance we're going to get down here. This is my target in eToro. If you do like my trading approach and want to follow more closely, you can find me on eToro, and my username is Simon G Forex. So yeah, consolidation, boom, will either go up or down. My stop losses roll really, really tight. This is a profitable trade. I've got profit locked in. So whatever happens, this trade is a winner, and that's the position I like to get myself in. This pair not doing anything on euro, Japanese yen. Yeah, nothing much going on here. Okay, so this is the next trade that I'm in. This is the euro Swiss franc. Let me just check. Yes. Okay, so it looked like we had a gap there. Okay, that's fine. Just checking the feed is okay, which it is. I was missing 2 o'clock and 6 o'clock candles for some reason, but we're back in business. So I have two positions on here. My target here to take off 50% of the position is down here at the bottom of the range. This is a range trade. I added to my position once we got through these simple moving averages. So this is a profitable trade, and we'll see where we get to. Swiss franc, Japanese yen on the daily. Okay, so I'm a buyer, and the reason I'm a buyer is yesterday we closed above the daily 10 exponential moving average. If I look at the my 240 chart, you'll see we had the cross here. The 10 exponential moving average crossed over the 50. The 50 is now turning up. Until I get a cross back, the 10 below the 30 exponential moving average, I'm still a buyer. If we get a cross back, it's starting to tell me that maybe things aren't working out as expected or as hoped or planned, and I'll exit a third of my position. But for the moment, I'm holding firm. Got my target up here below the downward sloping 200 simple moving average. Okay, so let's move on into my commodity synthetics. So synthetics cross pairs, same thing. The major pairs are the pairs that are traded, and obviously if you cross them, take out the dollar, both will trade on the dollar either side, then you have a what's called a cross pair or a synthetic pair. Okay, so let's have a look at this. Pound Aussie, this has been a mess, and I was just loading this. I was stopped out of my position here again for a small loss, capped the loss with a stop loss. Just wait for this to load. And you know that happens. You know, if you one of the best trading strategies you can have is toss a coin. You know, if it's heads you buy, if it's tails you sell, providing you hold 2 for every 1 you lose, you know, over a period of time. If it's 50-50, you're going to be profitable. You're going to make some really decent money. But you know, you are gonna lose. You know, you have to be prepared for that, and you have to have money management rules in place that prepare you for that. So this is what happened on the pound Aussie. I was long. Bit of an issue here, and I think this could have been a data issue. I saw a up cross here, took it on this candle, but then we came down. I roll my stop below here. What happened? It looks like the cross never happened. Not sure if this was a data issue, not sure why, but I'd roll my stop, came out with a smaller loss than could have been. Your first stop is generally your best stop. Euro Aussie. Whoa, massive uptrend here. I'm not in anything yet, waiting for a signal on this to get long. Aussie Japanese yen. Okay, it's all sell, 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 sell on the daily. We're in bearish trend. So I added my third position here this morning on the 6 o'clock candle on a YX signal, just at the entry point now. On any trade that I have, I add up to a maximum of 3 positions. I only add a next position once the previous positions are in profit. So for example, my first position on my full house strategy, once I was in profit, I added position 2 on another signal. Then we get into profit on position 1 and 2, got another signal, have added here. There is enough momentum to give me roughly a 1-to-1 trade down to here. This trade is in profit whatever happens, because the profit on position 1 and position 2 will more than pay for any loss I sustain on position 3, and that's where I always like to get to. This is why I talk about pyramiding into positions based on strength, as opposed to trying to pyramid out of a losing position, which is what a lot of people do when they get started. Not a winning proposition. Aussie Swissy, similar kind of thing to the Aussie Japanese yen. Aussie CAD, this is a new pair I'm looking at. Yeah, I'm not trading this one at the moment, but it's a similar kind of thing. The Aussie is showing weakness pretty much across the board. Australia, New Zealand. This is quite a nice pair. That one of the reasons I wanted to bring this into my portfolio, because they tend to have similar respond in similar ways to the market. It tends to be quite regulated in how they move. So when a signal shows up, I will take that signal. I'm developing a second range trade strategy at the moment. I have 2 trend trade strategies, my trend trade and my full house, and I have 1 range trade strategy at the moment. I'm testing and looking to develop a second one, so I'll have 4 strategies that with 4 different edges, which give me more than enough opportunity in the market, particularly across 23 currency pairs, and based on my assessment of relative strength and sentiment, I can then pick the best opportunities, maintaining strict discipline in terms of correlation risk. So I don't want to be too long the dollar, I don't want to be too short the yen, unless those positions are protected. My maximum risk on any one currency is 1% of my trading capital. 1% of my trading capital. So effectively 2 position 1s. Not doing anything on here. Okay, this is the one I wanted to talk about, CAD, Japanese yen. You'll see here on the daily, yesterday we rejected the daily 10 exponential moving average, which I use as one of my signals. On the 240, you'll see that we had this Z candle, rejection candle. Now this triggered last night at 6 o'clock on the 6th, so I got short at 6 p.m. last night UK time. Now when I got short on this candle, as part of my that should, hang on a sec, that is that is a full house. That shouldn't say range, that should be full house. That's a full house signal here because everything's pointing in one direction. It's not a range trade. I'll change that in a moment. So when I got short here, this candle closed below the 50 simple moving average. Now when I woke up this morning, this candle was above the 50 simple moving average. So how can that be? If it closed at 6 o'clock last night, how can it suddenly be above it? And the reason being, I had a gap in my data. Remember I told you about the Trade Navigator data problem. So I would not have taken that trade last night at 6 o'clock had the data been correct and it had closed above. It wouldn't have been a valid signal for me. Having said that, I took it and it is working. I could have taken this candle at 6 o'clock this morning as part of a full house strategy. That was a valid signal. So I'm happy to be in this trade, but because I took this trade on an invalid candle and in what turns out to be an invalid signal, what I've done is roll my stop to entry. So I can't lose money on this trade. I'm not taking it off because I'm in profit, but overall my stop to entry. And occasionally you'll make mistakes. A trade where you make a mistake, particularly if it was your own mistake, you should get out of that trade. But here I've made a mistake based on what the chart was telling me. We're in a winning position, so my view is I might as well stay in. My target's pretty close. I'm kind of right slap bang between my stop loss and my target. The stop loss will take me out if we get there, and it will be a break-even trade. So in a good position. What else have we got? So CAD Swissy, not going to talk about that. New Zealand. Okay, so that's pretty much it. I'm just going to show you something else before we go. So this is my eToro profile. It's my portfolio in eToro. My username is Simon G Forex. What you can see here is the positions that I'm trading through my regular broker. I trade smaller size in eToro, but I've got 4 out of 5 winning. That's a really good probability there. If you've got 4 out of 5 winning trades, that's great. 4 out of 5, what's that? An 80% win, providing these do win. But if you're interested in my approach and want to check out eToro, then go to Simon G Forex, and you can do that there. So if you like this video, please consider subscribing. You'll then get a notification. Actually, subscribe and then click notification button on YouTube. You'll then get a notification when I post one of these videos. As always, anything can happen in the currency markets. If you are a trader, enjoy the weekend, relax. That's what it's for. And I'll certainly try and do the same. And I'll be back next week with another video. So trade safe. And I'll talk to you again soon.